Hey, everybody. Claudia De Silva here, the team leader for the Palm Leaf Realty Group at Coldwell Banker. And I'm here today with a very special guest. We actually have been working for a few years and we have helped a lot of families get into their dream homes. And today's session is again geared towards the home buyer. Why? Because I truly believe that this is the golden hour of home purchase. If you are on the fence, if you have been wondering if you should buy the house, my answer to you is yes and yes. This is the moment to do it, because when should you buy a house? When you're ready, when you have some money saved, or when you talk to your real estate professional and loan officer that I'm about to introduce you, and we can craft a plan and see how we can help you. Because as we all know, when you rent a home, how much interest rate are you paying? 100%. You got that right. So I wanted to talk to you today with this amazing guest, Dee Carter with CMG Loans, about Loans for Heroes. I want to give back as much as I can by helping you make the most sound investment. Because next to, and I have said this many times, getting married, having kids, probably buying a house is one of the big ones, right? And figuring out what to do with your elderly parents. That's my fourth one now. So I wanted you to, we're here to make sure we give you tools, resources, education pieces that you can feel empowered and make decisions and get the right information right from the source, because there is so much misinformation out there. And Loans for Heroes, Dee's going to explain a little bit about it, but it's my way of giving back to the community. Make sure that we're giving back to those heroes that don't wear capes. Maybe sometimes they do on Halloween, but they don't wear capes and they're out there giving their life away. And this came to me just recently. I helped a police officer. If you're watching this, you know who you are. Purchase a home. And I was getting the buyer consultation because one of the biggest support services I offer as a real estate agent is that we have financial counseling, home buying education, from classes to consultations. And we are here to help you understand the home buying process from A to Z. And I was trying to have this consultation with a home buyer, prospect home buyer. She told me she was a police officer and she wanted to rent. And she was paying $2,600 in rent. And I told her, we can get you into a beautiful home for that much money if you have a job and think about retirement. When the professions we are going to talk about, they are a lot of the times government employed. And we all know that we don't make as much money as we probably should when we are employed sometimes by the government. So we need to think about other ways to think about retirement, to think about being safe later on, to building, wealth. It's very important. So I had this conversation with this prospect buyer loan officer, and then we stopped the call. She went about her day, and the next day she called me and she said, Claudia, you're right. I no longer want to rent. I was actually peeling a dead body off the road. This was exactly her conversation. And I was thinking of you. I was thinking about all the things you were telling me and how much I really want to build wealth and I want to have a plan for later. And so thank you. And we got her into her home. And guess what? Her mortgage is less than what she would pay for rent. And that's it for today, folks. So let me bring Dee on the screen. Hi, Dee. How are you?
I'm good. Thanks, Claudia. Thanks for having me, especially talking about this great topic.
I know you are as passionate about it as I am. We love giving back. I think that's why you and I work so well as a team. And a lot of the people that follow me, they probably have heard about you anyways, or they have closed the house with both of us, purchase a home. But before we get into it, tell us a little bit about yourself for those that don't know who you are, what you do, and where they can find you, so to speak, like which area of town.
Great. Yes. So my name is Dee Carter, and I am a loan officer or loan originator for CMG Home Loans. My physical office is actually in Montgomery, Texas. If those of you that are local, if you know the Wood Forest community, it's a beautiful community out here, kind of in between the Montgomery proper, down 105 West and 1488. So there's a great little niche community in there called Wood Forest, and we have a beautiful office in that area.
And you should know where Wood Forest is because it's been nominated one of the best suburbs of Houston. It has a lot to offer. They don't have as much new construction at the moment, or at this point, we're entering the resale phase, meaning homes that have been lived in and now they're back on the market. I just did an open house there 3 weeks ago, and I love that subdivision. It's so nice.
It is beautiful out here.
It's beautiful out there. Okay, so Dee, what are we here to do today? What are we going to be talk about today?
So, talking about loans for heroes, and heroes are not just, I mean, obviously our veterans and our veterans and our active military are definitely our heroes, but like you were talking about, our police officers, corrections officers, emergency response personnel, even our school teachers, those are the biggest heroes, especially for our children. Firefighters, definitely, and school counselors, school nurses, librarians. So there are programs to help get them into homes, because a lot of times, just the affordability, having that down payment, all of the things that go, if they have never purchased a home, not familiar with the process, they don't understand all of the costs that are associating with closing the home or even upfront costs. There is a specific program through the Texas State Affordable Housing Corporation, also known as TSHAC, and they offer a Homes for Texas Hero programs. And I really wanted to talk about that today because that particular program is just, it's designed to help get those types of professions with down payment assistance. There's other types of opportunities with that, but I want to just talk today about what they are offering in regards to down payment assistance, what it would take to take advantage of this program, and of course, answer any questions that anyone might have related to that.
Absolutely. If at any point during this video you have a question, just leave it in the comments. We'll come back to you after we are done. And if you would like to be connected with Dee Carter, just connect with me, send me a direct message or text me, and I will make sure you will get an introduction. We're looking at some details on the screen, but I have a few questions that I want to go through to better help you understand exactly what Dee mentioned, how to take advantage of this program, because we really believe that all of these professions you can see in this screen, not just these ones, but to speak of a few, they actually shape our communities. There are the public teachers, the people in the library, the MS personnel, school counselors, firefighters. I mean, we want to give back. I see firefighters in some communities having to ask for donations. Sometimes I'm driving, and I know that unfortunately, sometimes they don't get as much funding as they need. And so at least this is a way that we can help anyone within these professions to get a roof over their heads and build wealth and, be safe and have a home because they give so much. So let's start and that's kind of an obvious answer because the names are there on the screen, but who is eligible? So these are you need to have a profession in this category, correct?
That is correct. Yes. For this particular program, to take advantage of the options here. And now TSHAC has programs that can be taken advantage of for first-time home buyers if they are not in this profession, but it's a little different. And this will provide some reduced fees and different things like that. And so this one's geared directly towards the professions that we see on the screen here and that we've talked about.
Okay. So another question that I actually think a lot of people will have, and including myself, is this program that we are talking about today, is this something separate or that you can have jointly together with an FHA or a VA loan?
That is right. Yes. So you can actually do a conventional VA, FHA, and even a USDA loan utilizing this program. There are down payment assistance options with this program as well you don't have to use that. One of the things that we look at, especially in today's high interest rate environment, On occasion, it doesn't happen every day, but on occasion, we'll see reduced rate bonds through these programs. And so when we see that we're doing a loan for a profession such as this, then of course, we can look to see if we can take advantage of any of those reduced interest rates for those buyers, for those borrowers. Of course, if they want to take advantage of the down payment assistance options that can go along with that, then of course we want to look at that as well.
Are there any specific loan limits or property types that qualify?
So all property types will qualify for these programs. When you're looking at single family homes versus let's say a manufactured home, the only difference in qualification would be your credit score. So qualifying credit score for a single family home, or even a condo, or single family, your standard type of a home, your condos in a condo complex, or a townhome that you actually own the actual townhome and it has a legal description of the property, then 620 would be your required credit score in order to be eligible for this program. If it's a manufactured home, the credit score requirement goes up to a 650. But as long as they meet those credit score requirements, then absolutely we should be able to take them in the route of this program and take advantage of anything that's offered.
Absolutely. Allow me to just do some subtitling, I call it here. I've had these questions quite recently. Single family home, something that is on a foundation, something that is not movable. Manufactured home, it means it was built somewhere else, was moved and placed somewhere. So those are sometimes mobile homes, double wide, single wide, manufactured homes. There is a slight difference there, but just so you have a better idea. Condos. I had a lot of questions recently about condos. I have a lot of 55 plus looking to reduce their home expenses. They no longer need their 3,000 square foot home, want to go into a smaller condo, particularly in the Walden, Montgomery, Willis area. And I want you to know that we would need to make sure that the complex qualifies for the loan. It's not just if you qualify for the loan. With condos is a little bit specific, and the townhouses as well, depending where they are located. So I had this question recently. It's not that you can get a loan, you can qualify for a loan for a condo easily, but that complex may not take your loan type. It may not be able for financing. So I just wanted to leave that out there because I find that very important. Let's talk about down payment assistance. How does that work? How do you calculate? Is there a maximum amount of down payment available through this program? Is it per family, per situation? How does that work?
So you can take advantage of down payment assistance. So they'll typically offer, this particular program actually offers anywhere from 2% up to 5. And that's going to be of the loan amount of the home. And so when we're looking at the loan program, so let's take a conventional loan. So your standard, you can either do a 3% down for a first-time home buyer or 5% down for a conventional loan. So when we're looking at the loan amount, we're going to reduce that by either the 5% or the 3%. That's your minimum down payment amount. And then the loan amount, we will multiply that amount, and that's how we would determine the down payment assistance that can be offered. Same thing with FHA. Down payment's a little different on FHA. We have a 3.5% minimum, and so we would calculate it based on that. And then, of course, VA, if you're taking advantage of 100% financing, then we would calculate it based on the actual loan amount, which would be probably more than likely the sales price of the home.
Absolutely. Are the rates fixed or adjustable? And what is the process to determine rate? What goes into determining the rate that the person will get?
So that's a great question. So the rate is actually a fixed rate, 30-year mortgage. There are no options to reduce that down to different terms. So if you were looking for a 20-year mortgage, we would not be able to take advantage of this program. But so it is a fixed rate on every type of loan program. And so as far as the the amount of, so let's say that you take 2% of down payment assistance. For each increment that you take, you will be offered by the program a specific interest rate for that down payment. So let's just say if 2% of down payment assistance would give you a 6.5% interest rate. If 3%, then it's going to raise you up, let's say, to a 6.75. 4% may take you to a 7%, and a 5% may take you all the way up to a 7.5% interest rate. So obviously the amount of down payment assistance that you take, the more you take, the higher your interest rate is going to be. So when, as a lender, what we're looking at, if I have someone that wants to take advantage of this program, we really want to make sure that it makes sense for them, not just for qualification purposes, but, to keep in mind their specific monthly payment, because as we go up in, it's great to have that assistance, that money to help us get into the home, but we want to be able to afford that monthly payment each month. And so we don't want that interest rate to be so high that it makes affordability difficult. And so those are questions. Obviously, we're talking to the client ahead of time to see exactly what they want to take advantage of, what they need, what they're comfortable with in regards to a payment, all of those types of things. And then this is so the way these programs work, there's actually two different categories that they offer. One is a grant, and it's actually a true grant. It's a 3-year, what they call a deferred forgivable grant. And so, as long as there's no payments towards it or any of that sort of thing, the interest rate that's given, that's actually on the loan itself. So you're not paying back this money, and there's no interest that's accrued over that period of time on the money that's given. So the grant program, it's a true grant, as I said. So, once you close the loan, if you were to sell the property or refinance the property, let's say within a year's time, that money would not have to be paid back. It is what they consider a true grant program. Now, the interest rates are different on a grant program than it is on what we call a 3-year forgivable second lien program. The second lien program, and I'll talk about that in a second, but if we talk about a grant, interest rates are a little higher per those. So the 2% would be a little higher than what we just discussed, right? And so, so we look at the grant program first to see, is that something that we want to take advantage of? If the rates don't seem like there's something that would help the client in the long run, then we look at what a 3-year deferred forgivable, and they call it a deferred forgivable second lien. And, sometimes that second lien can be a little scary for people, especially if you're coming in and just trying to understand the mortgage process. The word lien can get a little scary on it to anyone. But what that means is the amount of down payment assistance that's given, it actually just really, it is attached to your property, and it does stay there for 3 years. And as long as you stay in that property, never refinance that loan, then at the end of that 3-year period, on the anniversary date, then that completely goes away. You never would make a payment on it, any of that sort of thing. If you were to sell that property within 3 years' time, then the amount of assistance that was given to you at closing, you would have to pay that back to the state. And so that's the difference between those two programs. Grant is a true grant. Do not have to pay that back. Whereas the 3-year deferred forgivable second lien program does have to be paid back if you change the mortgage within 3 years' time.
I think that's very useful information. And although the rates sound like a little bit higher, I still consider them quite feasible and amazing that we can help people get into homes with a lot of down payment assistance. That's what sometimes prevents people getting into a home. And we're not talking even of 20%. No one buys houses almost to 20% down, even for 3.5%, 5%. Having that help is tremendous. And you and I just had success with getting a couple into a home where they actually had to bring zero to the table, and they were not even VA, so veterans. So that was amazing. Are there any income limitations, Dee, for these programs?
There are, yes. And so, we follow the area median income that's provided to us by the state of Texas. And so this particular program, it's this is not based on household size. So it doesn't matter if there's one person or 5 or 6 within the house. The area median income, we would actually have to go out and search. For the most part, it's typically around 117. That changes every year. As this new year comes around, that income may change, but on the average, it's I believe right now this program is 117 and probably some change. I'd have to go out and look specifically, and again, depending on the area. There are other programs that within TSHAC that if their income is below the area, so not the median income, but below, trying to think of what the terminology is for that. There are other programs that, if the income is lower, then I believe I'd have to pull all those incomes, and that may be a better conversation for another day. But sticking to this, yes, let's just say that it's 117 and some change today for that income. There are income limits for this program.
All right. So say that I have one of these professions and I want to start the loan application. What is the process here?
So it would like any other loan process, you would start with your loan application with your lender. And not all lenders are going to be able to offer TSHAC. So they do have to have that program already set up in house. There is an agreement that we have with CMG with our TSHAC so that we can offer these types of loans to our clients. So, making sure that's something that you need up front. Make sure that the lender that you're working with has options for you to take advantage of. So in our case, we would, of course, send them the loan application. They would complete that. And then at the end of the loan application, once we're putting it all together, having those conversations with the client to find out exactly what it is that they are going to need to help them get into the home. And start, going back to what I had mentioned in the beginning, there's quite a few clients that they don't necessarily need assistance. And the fact that it's a 3-year deferred forgivable for them, it just doesn't fit into their long-term plan. And so those are things that we have those conversations. So this may not be the right way for them to go, or maybe we want to just look at taking advantage of a reduced interest rate. Anything that doesn't have any cost or any, not cost, but any assistance associated with it, if they change that loan, refinanced or sold that property within the 3-year time, there would be no down payment assistance that they would need to return or pay back. So there's just a few, it's at that point, once they fill out that loan application, we're able to really have those conversations with them to understand what they need to help them achieve getting into this home. So that those are filling out the loan application is that first step.
Right. So what I'm trying to assess right now, so we can explain to the audience, is what kind of documents do you require on the loan application? So like your W-2s, just like give us a quick rundown. And then for this particular program, is there anything in additional that is different than the other loan? So that's kind of, because a lot of people call me and they never bought a home, and they went, okay, what is the loan officer is going to need? So I always like to be proactive and tell them. There is also, and you know that you actually closed on a house with me with someone that was not from the US before, and those people need extra reinforcement, and we do have a lot of international buyers. So I like to be proactive and let everyone know in advance, okay, what are the documents that you are going to need to submit for this loan application?
Okay. Yes, and you're right. And it's really going to be client specific. Well, not client specific, depending on the type of income that they have. The type of documents that we would collect for the loan could vary, but that's really going to be the only variation. So let's say that you're a W-2 borrower, or you work at a job where you get paid a salary, you have W-2 income. So at that point, we would just ask for your last 2 paycheck stubs, your last 2 years of W-2s, and I'm trying to think of all of the list of items. So of course your ID and assets. So there's 3 things that you need for qualification on a loan. Credit. So we're going to pull credit. We pull through all 3 bureaus. We're going to determine what eligibility you have for the loan based on that credit report. We're going to look at income. So depending on if you're self-employed or if you're a W-2 borrower. So self-employed borrowers, we're going to request them to send in their tax returns on a standard type of a loan program such as this. W-2 borrowers, we're going to ask them for their last 2 paycheck stubs. And of course, their last 2 years of W-2s. Now, this is going to be for each person who fills out the loan application will need their separate documents. And then, of course, any identification. So really a driver's license. We really don't even ask for a Social Security number or Social Security card to be sent to us. For identity purposes, we just need a copy of your driver's license. So that's on your standard loan program. When you're talking about international clients, there may be some additional documentation depending on whether or not they have credit established in the United States. If they have an I-10 number, if they, there's just some other verifications, or there's some other documentation that will be required on those types of loan, on those types of clients that we work with.
Absolutely. That makes total sense. So everybody, when you're buying a home, and I can sit down with you and have a whole buyer consultation because it takes 45 minutes and I can explain the process from A to Z. But one thing you need to know very quickly is that you have 1, your down payment, and 2, your closing costs. So let's just briefly touch on closing costs. Are there any special provisions within these programs for closing costs, and could those closing costs be included in the loan covered by the grants or the assistance programs?
Yes. So this program is actually designed to help pay for not just your down payment on the loan itself, because we talked about that a little bit, what those down payments might look like. Right? 3% or 5% on conventional, 3.5% minimum on FHA. Typically, you're doing 100% financing for VA and then USDA as well. But it's also how, you could get enough assistance to not just cover that down payment, but also to help with the closing cost as well. And so what's also really nice about this program is, and you as a real estate agent know this, clients probably won't be familiar with what's called seller concessions.
I was going to bring it up. Yeah.
Yes. So, so depending on the loan program, so your conventional loan, if you put down your 3% or 5%, your seller concessions, and what that means is when the real estate agent, when you are negotiating the contract, you are asking for a specific dollar amount for, to help offset some expenses for the client. And I'll let you talk more about that. But so for conventional loans, it will max out at 3%. So that's 3% of the sales price of the home. And then, of course, with FHA, it's going to be 6%. VA is actually vary. So it can start out at 6%, and I've seen it go up to 9%. And USDA is also 6%. So those loan programs will have, and that's going back to the client that you and I closed earlier in the month, or probably last month now.
Yeah.
Time just seems to fly by so fast. You were able to negotiate quite a bit of seller concessions for them, which was amazing. And then we were able to do a down payment assistant program that offered them, we really only needed 2% extra, I think 2% for them to allow them to come to closing with zero out of pocket. They were actually given money back. And the way that works is any money that so when you go under contract for a home, you will put up earnest money, and earnest money is actually the deposit. So you're actually paying some of your closing costs up front for that loan, and it's a percentage, normally 1%. Is that correct, Claudia?
Correct. It's negotiable, but yes.
Okay, so typically 1%. So that earnest money is actually sitting at the title company. And so any money that they pay in advance, that earnest money, also another expense that they will pay for out of pocket in advance is going to be an appraisal. So the lender is going to require an appraisal on the property to assess the value. And so when that appraisal is ordered, then the client would then pay for that appraisal. Again, that's an expense that they paid up front. So that's another thing that they could get reimbursed if they had an excess of assistance. So between the seller concession percentage and then the down payment assistance, if it then became that their closing costs were negative, they could actually get back all the way up to any, that the earnest money that I was talking about and the cost of the appraisal.
Thank you for mentioning that. So earlier I started by saying that this is the golden hour to buy a home. Guys and ladies and everyone listening. I always say guys because you're just standard, but I don't mean it like that. I mean everyone listening to us right now. That's the reason why. Right now we have programs such as this one that can give you all the way up to 5% on down payment assistance. And I can get seller concession because the market is somewhat slow, so to speak, meaning a lot of people are waiting. A lot of people are reluctant. Well, the real savvy buyers are out there right now taking advantage of this golden hour that I call it. That is the perfect moment, the perfect storm for a great purchase where we can negotiate sales price. We can negotiate the money that the seller will give you to help pay for costs such as closing costs or repairs or whatever maybe you see fit to use that money with. And this is how we have been getting first-time home buyers into homes where their monthly payment is less than a rental and they barely have to bring any money to the closing table. This is a conversation we will have when we have a buyer consultation. So if you would like to book a buyer consultation, this is a complimentary thing that I do. I love providing education. We can run through a few scenarios, even include D that can explain a few more things on the financial details and help you make a good decision. At this moment, if you are willing, you've been on the fence to buy a home, is the right moment for you. Be careful what you ask for. If rates come down, if they do, because no one has a crystal ball, to be fair, and the feds are going to be meeting this month of November, so we don't know what's going to come up, because again, we have had videos where we explain the rates are not dictated by the feds, but their decisions can affect where the rates can go, but they're not the ones dictating it. So people that are not waiting for that, they're getting tremendous deals. The people that are waiting, be careful, because you may be beat out of affordability later on. If rates come down, we already have such little inventory, between 3 to 4 months here in Houston, and to have a healthy market, you need to have over 6 months inventory. And that's not the case. It has not been the case since 2020, since 2019, more or less. We may not have enough houses for everybody. The prices are going to go up. So this is the moment for you to take action. Remember, when you file for taxes, if you buy a house still until December, all of that can still be great for your IRS when you file next year, including the interest rate you're buying a home. All right, so we did talk that the typical loan duration is the 30 years. fixed, and then the prepayment penalty or the refinancing is within the first 3 years, correct?
Correct. Yes.
Okay. All right. So we also talked that there are some limitations as far as income, but again, that is scenario by scenario, depending on the person. And I think also some areas as well, I think you will agree. And the property type has some nuances. We already talked if it's a condo, a townhouse, a single home, or a modular prefabricated mobile home. So all of that is a conversation we need to have. We need to understand what we're buying and who's buying. Now, this loan, I have this question, it's very interesting. Can you use this for investment properties in second homes, or is just for people buying their primary residence?
Right. This is for primary residence only. Yes.
Okay, perfect. All right. So how long does it take for someone to get qualified? So how many days?
There's no extra time involved in this utilizing this type of loan program. The pre-qualification program process is very, it's the same if we're just going with a standard program in house, or if we're taking advantage of this. We will work through this simultaneously, on our end, on the lending side. And as far as the length of time that it takes, once we get the loan through underwriting, we want to allow 24 hours for the state program, TSHAC, to be able to review the documents. So, it's an extra day, 2 max. They're typically very fast. And we do have to have that clear to close. Once our underwriters have reviewed and cleared the file, then at that point we send it over to TSHAC. They do what they need to do on their side to clear it. And then, and usually by that time we are, we're at the end of the process. We send it over to TSHAC, and now we're working with our title company and our closers on finance, or the final numbers of what that borrower needs to bring to closing, what's left, all of those types of things. And so most of the time, the borrower really doesn't even know that TSHAC is now reviewing that file. It's just really part of that process. It's happening on the back end. So to answer your question, that was kind of a long-winded answer. It could take 24 extra hours for, if we're utilizing this program.
All right, perfect. I think this is a really good session for people to be aware of what's out there to help them get into a home. We are very big here in building wealth and, creating stability financially, and owning a home is definitely the path to do that. I was just talking to someone that was telling me how grateful they were. They bought a home 30 years ago, because now they are selling that home, and with the equity that they have built, the value that the home has appreciated, they are now downsizing, and they are going to be paying on a new mortgage completely off. They're going to be mortgage free, and they're going to have extra money in case they want to travel or have any health care scares, because we are all going that way. No one stays young forever. So I want that for you. If you're listening to us, you decide to work with us, that's the conversation I want to have with you in 30 years, because I'm not going anywhere. I am staying put. I love what I do, and I want to help you. So let's look at this slide we have on the screen. We kind of touched in everything pretty much, but there is anything you want to share still about the program? You want to, break it down a little bit more, just a summary here?
Just to summarize, this taking advantage of the down payment assistance programs, even if we're looking at the 3-year deferred forgivable, I don't want people to be discouraged. I know that interest rates right now are higher than what we saw 3 and 4 years ago. But when we are looking at these programs, what we talk about in the beginning is what's going to be the biggest factor of whether or not we utilize a program such as this, if it's going to work for you, because we're going to talk about your long-term goals. What does it look like for you in a year, 2 years? Is this going to be a struggle for you to pay your mortgage for the next year if we end up with this interest rate? Those are things that we don't want to happen. And so we want to make sure that we are taking advantage of these types of programs only if it benefits you. And as Claudia mentioned, none of us have a crystal ball. We don't know what's going to happen with interest rates. For the past year, we have been anticipating a drop in interest rates. Actually, I think since last summer of 2023, we have been talking about a reduction in interest rates. And unfortunately, it just hasn't happened yet. And so, getting into this type of program, it's just crucial to make sure that we have all of those conversations up front, that we work as a team. And that's something that Claudia and I do. We work as a team. She's talking obviously with the client about what their specific needs are in the home. I'm talking to them about the lending side, about finances. And then we come together so that we are all on the same page. We are working as a team to make sure that what's negotiated within the contract is in the best interest of helping the client not just get in the home. It's great to be able to make that transaction happen, but we got to make sure that 5 years down the road, or even a year down the road, that the program and the home that we put you in is working for you and your family. Because if it's not, then we haven't done our jobs properly. We're not helping you build long-term wealth. And that is our goal for sure. And so I think that's one of the benefits of working with us, is because you have to have that trust. It's in that relationship all the way around to make sure that we just want you to be successful in your purchase.
Absolutely. And I have two things to add. The first one is that even if you're purchasing a home at 7%, I know it seems like a lot, because just 3 years ago, people were buying under 3, right? But that's never going to happen again. And if it does, we are in big trouble. Then we're really going to get what we've been wishing for, that is a major recession and probably a crash in the housing market. And we can't have that. So the interest rates being at 7%, it's a little bit high. But if you take advantage of this program and coupled with seller concessions, money that the seller can help you towards contribution, you can be getting into a home with 0% down, basically, or very little.
Very close.
I've had people with less than $1,000 getting into a brand home, a home that they're going to continue appreciating. To me, that not having to bring any money, but getting to a home that costs even less than paying for a rental. Even if you're renting at $1,500 right now, when you get into a new place, you got to pay $3,000. We can get you into a brand new home if you qualify with less than $3,000, depending on your situation. I think that's the 3 years is a very small price to pay for such a benefit that, by the way, doesn't exist in any other country I'm aware of. So this is amazing. The second thing is, and I will let Dee talk about her portion of why we love you guys. We want to help you. We love first responders, teachers. We are here to serve you indeed. And I know Dee has a few benefits for you in addition to her benefits that she'll speak about it in a minute. I want you to know that when you work with me as your real estate agent, I save you thousands of dollars in home warranty, setting up all your utilities. Yes, we have concierges that can do that. Discounts in moving, and so much more. When we go through our consultation, I'll break it down, all the things that I offer you. I don't want to give it all away right here and then, but we do because we care. So Dee, when people are working with you, what are the things you can give them a financial break on yourself, your company?
Yes. So CMG, they want you to, not everyone wants to take advantage or can take advantage of the program that we talked about through T-Shack. So we offer an in-house program for our first responders and teachers. And the list that we just, as far as who can qualify for that, it's not just your veterans, active military, and school nurses and librarians and counselors. It is, the list goes on and on. So if you are in a public service type of position, then you would definitely qualify for this program. So we offer some reduced fees that are associated with closing the loan. So if you're a first-time home buyer and you're not familiar with fees, or if you have already purchased a home and just been a long time and you don't remember all the fees that are associated with closing that loan, there can be quite a bit, and any little bit of help, can definitely reduce your final cash that you would bring to closing. And so what we do is we reduce those fees by eliminating a tax service fee, credit report fees, and then of course the appraisal that we have to order to determine value of the property will give you a $200 credit towards that appraisal. And that's just, that's CMG offering that to our first responders, because we want to be able to give something back to the community. And now I do want to stress or specify that this program cannot be coupled with the TSHAC program that we just talked about. So this would be for clients that are, for some reason, maybe they didn't qualify for that program, didn't want to go that route. And so, of course, we would still give you some reduction in fees to help you, just because we want to give back. And, we appreciate our first responders and our Texas heroes. Definitely.
That's a really good way to leave it. To our Texas heroes, we are here to help you. Just reach out so we can get you started in getting home. Thank you, Dee, for being here today. Thank you, everyone, for watching.
Thank you.
Bye. Talk to you soon.
Bye.